Join the club of the richest 1%. By employing the strategies in this video, you can become rich and established and join the club of the richest 1%.
The knowledge and strategies in this video are rooted in Jacob Nayman's extensive experience, distilling more than a quarter of a century in his role as a leading investment and economic advisor to some of the world's wealthiest. Infusing your life with the financial strategies outlined in this video will enable you to achieve the most important goal of the 21st century: financial independence.
Quote, "The best chance to deploy capital is when things are going down." End quote. Warren Buffett. You can think of ETFs like a train running along the market's trend line, i.e., the tracks. You, the investor in those ETFs, are not the train driver, but a passenger who can choose when to get on the train and when to get off. As an investor who manages their own personal portfolio, you decide when to buy and sell ETFs and the amount of your investment. Those decisions will impact your return. When you want to invest your money for the long run, you can adopt Warren Buffett's strategy. Quote, "I will tell you how to become rich. Close the doors. Be fearful when others are greedy. Be greedy when others are fearful." End quote. To achieve alpha returns, which sectors should we focus on for the long run? The answer is straightforward. The sector or sectors whose prices have decreased considerably, over 35%. If, for example, the technological sector in the market has gone down by 32% and the inflation is at 8%, we can consider buying an ETF on the NASDAQ after it goes down 32 plus 8%. If it continues to go down, say by an additional 10%, we can buy more. There is a high probability that after several years, the technological sector will rise again and we will enjoy nice profits from our original investment. When you see that the market is coming close to its peak, i.e., the market is saturated, you can decide to materialize some of your long-term investments by moving some of the money to less risky investments, namely solid ETFs. The main points. If you have the opportunity to buy securities in a sector or an index at low prices, then increase your exposure to this index or sector. Implement Warren Buffett's golden rule, quote, "Be fearful when others are greedy. Be greedy when others are fearful." End quote.
Is predicting your economic future a riddle wrapped in an enigma? Not quite. It's about creating it. Financial practices shared in the earlier segment, courtesy of financial expert Jacob Nayman, are your toolkit for securing that future. But here's the catch. Knowledge isn't the ultimate prize. It's action that truly counts. The upcoming segment aims to spark that drive, that motivation within you to implement these strategies. So take note and remember, in the grand chessboard of finance, it's not the player who knows the most moves, but the one who actually makes them, who wins. This video contains valuable information. Use it.
Ever wondered when is the best time to buy or sell stocks? Timing, it's a crucial component of stock trading, a factor that can significantly sway your potential profits or losses. In the stock market, timing isn't just the spice of life, it's the bread and butter of successful trading. This video will provide a step-by-step guide to understanding the best times to buy or sell stocks. Ready to discover the secrets of timing in stock trading? Let's dive in. First off, when should you buy stocks? Well, let's dive right into it. The best time to purchase stocks is typically during market downturns. That's right, when prices are low. You might be wondering, why would I buy when the market is down? Here's the trick. This strategy is commonly referred to as buying the dip. It's like snagging your favorite item on sale. You're essentially buying stocks at a discount. However, don't get carried away by the allure of sale prices. It's crucial to conduct thorough research and analysis before making any purchases. Understanding the company's financial health, industry trends, and market sentiment can help you make informed decisions. Remember, the stock market isn't a game of luck. It's a game of strategy. And one of the best strategies is to buy low. But always remember, before you part with your hard-earned cash, make sure you've done your homework first. All right, you've bought some stocks. Now, when should you sell? Well, the general rule of thumb is to sell your stocks when they're at a high price point. This typically happens during market upturns, allowing you to maximize your profits. It's like a game of peek and plunge where you aim to sell at the peak. Now, this might sound simple, but here's the catch. Predicting market trends can be like predicting the weather. You might have all the data and still get it wrong. That's why it's crucial to do your research, study market trends, and analyze the performance of your stocks. Remember, selling stocks isn't just about making a quick buck. It's about making informed decisions based on thorough analysis. It's about understanding the market, the economy, and your stocks. So the golden rule is sell high during market upturns. But remember, predicting the market isn't an exact science. Let's recap what we've learned today. The ideal time to purchase stocks is during market downturns, taking advantage of lower prices. Conversely, the optimal time to sell is during market upturns, capitalizing on higher prices. Remember, timing is everything in the world of stock trading. Happy trading!